How to leverage real estate to build generational wealth. Real estate is often considered one of the most powerful vehicles for building long-term generational wealth. From generating consistent rental income to benefiting from property value appreciation, real estate can create lasting financial security for you and your descendants. Whether you're just starting to think about your financial future or looking for ways to grow your wealth, understanding how to leverage real estate to create generational wealth is key. Here is how you can make real estate work for you. 1. The power of passive income. One of the most straightforward ways real estate contributes to wealth building is through passive income. When you buy properties, especially rental properties, you earn a monthly stream of income from tenants. This income can be reinvested or saved, allowing it to grow over time. Over decades, these rental payments can turn into a significant nest egg for the next generation. Why it matters. Rental properties can cover the mortgage, taxes, and maintenance costs, leaving you with profits. Over time, as rents increase, your income grows while your mortgage payments remain fixed, assuming you have a fixed-rate mortgage. 2. Appreciation. Your property's value grows over time. Real estate typically appreciates in value, meaning the property you buy today could be worth much more in the future. This increase in property value can be one of the most powerful ways to build generational wealth, as it allows you to sell or refinance for a large profit down the road. Why it matters. Property values generally rise with inflation and economic growth. Even if your property's value doesn't double overnight, it can grow steadily over the years, helping you build equity. Tip. The key to maximizing appreciation is choosing the right location. Properties in high-demand areas, whether due to growing businesses, schools, or future infrastructure, tend to appreciate faster than others. 3. Building equity. Wealth through ownership. Every mortgage payment you make goes toward increasing the equity in your property. This is money you own outright and can use as leverage for future investments or even pass down to your children. In fact, building equity is one of the primary ways that real estate becomes an effective generational wealth-building tool. Why it matters. Over time, your equity can be borrowed against or used to purchase more properties. As you pay down the mortgage, you own a larger portion of the home, which increases your financial security. 4. Tax benefits. Saving money while building wealth. One of the least talked about advantages of real estate investment is the tax benefits. The IRS offers several incentives to property owners, such as deductions on mortgage interest, property taxes, and even depreciation on the property. These tax breaks can significantly reduce the amount of money you owe the government, allowing you to keep more of your rental income. Why it matters. Depreciation allows you to write off a portion of your property's value each year, lowering your taxable income. Tax deductions for repairs, maintenance, and improvements on rental properties mean more money stays in your pocket. 5. Real estate leverage. Using debt to your advantage. One of the most powerful aspects of real estate is the ability to use leverage, which means borrowing money to purchase properties. This allows you to own and control more real estate than you could with cash alone, multiplying your potential for wealth creation. Why it matters. Leverage helps you amplify your investment returns. With a relatively small initial investment down payment, you can control a much larger asset, the entire property. As property values increase, your return on investment (ROI) is much higher compared to the amount of money you initially invested. 6. Diversification. Protecting your wealth. Real estate also allows you to diversify your investment portfolio. Rather than putting all your wealth into stocks, bonds, or savings accounts, real estate offers a tangible, physical asset that provides additional security. In fact, many successful investors recommend holding a variety of asset types, real estate included, in order to protect against market downturns. Why it matters. Real estate is typically less volatile than the stock market, meaning it can act as a safe haven during financial instability. It helps balance your portfolio and gives you a hedge against inflation, as property values often rise with it. 7. Starting early. The key to building long-term wealth. The earlier you start investing in real estate, the more time your investments have to grow. Starting in your 20s or early 30s can make a significant difference in building generational wealth, as you'll have decades for your properties to appreciate and generate income. Plus, the earlier you start, the more likely you are to own multiple properties by the time you're ready to retire. Why it matters. Time is a powerful ally when building wealth. The sooner you get started, the more likely you are to benefit from long-term appreciation and rental income. By starting early, you can also pass down properties to your children or grandchildren, giving them a financial head start. 8. Passing it down. Creating wealth for future generations. The ultimate goal of generational wealth is to pass your assets down to your heirs. Real estate is one of the most effective ways to do this. Properties can be handed down from one generation to the next, providing future family members with financial stability. Additionally, real estate can serve as a foundation for the next generation to build upon. Why it matters. Unlike other assets that might be sold or devalued over time, real estate can continue to appreciate and generate income, benefiting your heirs. Through thoughtful estate planning, you can ensure that your properties and wealth are passed down to your children without unnecessary tax burdens. 9. Real estate syndications and partnerships. If buying properties outright isn't possible right now, you can still invest in real estate through syndications or partnerships. This allows you to pool money with other investors to purchase larger properties or multifamily units. While you won't have as much control over the property, you can still enjoy the benefits of appreciation, rental income, and tax advantages without needing to put up as much capital. Why it matters. It gives you access to larger investments and more diverse portfolios. Syndications allow you to be involved in real estate without managing properties directly. Final thoughts. Real estate is a tool for building generational wealth. Real estate is more than just property, it's a long-term investment in financial freedom and family security. By strategically investing in real estate, you can take advantage of appreciation, build equity, generate passive income, and protect your wealth through diversification. When approached correctly, real estate can provide you and your descendants with financial stability, security, and the opportunity to thrive for generations to come. Building generational wealth through real estate isn't a get-rich-quick scheme. It requires patience, careful planning, and smart investments. But by getting started now, you can lay the foundation for a lifetime of financial security for you and your family. So, what is your next step? Start researching the market, seek out investment opportunities, and prepare to create lasting wealth. This approach emphasizes education, long-term thinking, and strategic planning, which are all essential when it comes to using real estate as a means of building generational wealth.